welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand all the latest cues on the D Street, especially the benchmark index moves, the sectoral indices, and the way the Nifty gainers and the losers are shaping up, the stocks that are buzzing the most in trade, and where are experts keeping their focus on, and what are the strategies they're recommending to all the investors. That's what will be the focus of this discussion as well. But first up, a quick look as to how the market benchmarks are really moving in trade as we speak. Well, consecutive 8 days of gains, but today there has been some consolidation is what we've been witnessing right from the morning trade. 0.5% almost down for the Sensex, although it's still above the 60,000 mark, down by 296 odd points. Look at the Nifty as well. There's a cut of 77 points, 17,734, the level at which the Nifty is also trading at, with a 0.4% cut for that one as well. Now, when we look at the broader market indices, the Midcap 100 index and the Small Cap 100 index as well, let's see how they are panning out and whether they are also witnessing cuts. Of course, about a 0.2% dip for the Midcap 100 index, although lower than that being seen on the benchmark index. Apart from this, when we also see the small cap 100 index, it's a similar fashion, but it's trading at the day's low point again with a 0.1% cut for that one too. When we look at the other sectoral indices, we've been seeing that most of the sectors are actually either trading flat or flat with a negative bias at this point in time. Of course, Nifty IT is the one that's in focus with a cut of 2.5%. That's clearly dragging the sentiments on the benchmarks as well. A sharp cut for this one. And in fact, all the Nifty IT constituents are down in the red with TCS after reporting numbers. It's down by 1.5%. Infosys ahead of its numbers today, it's down by 3%. Persistent Systems is down by 4% as well. You have Emphasis, you have L&T Technologies, you have Coforge, all of them down by over 1% each as well in today's trading action. So we are going to be focusing on all of that as well. But time now to welcome our guest on the show. We have Mr. Kranti Batini joining in from Wealth Mill Securities, Directors of Equity Research. Welcome, Mr. Batini, and thank you so much for taking the time out for this discussion. Well, first up, your outlook on the markets right now after 8 days of straight gains that we've been witnessing. Slight consolidation, was that bound to happen? And what do you expect going forward from here as far as the market's outlook is concerned?
Yes, actually, after 8 consecutive days of rally on the market, it is normal that market can take a breather and it can get into a consolidation phase. But how far this consolidation phase lasts is the bigger question to everyone. Right now, we need to look at the 17,800 levels for Nifty. These are the key resistance levels for Nifty. And if the market could able to sail through 18,000 levels, we are back again in a positive territory for the markets. Right now, we are in the earnings season, and earnings going to set the benchmarks for the stock performance and indices performance is concerned. Of course, we have some positive news from the Met Department stating that the monsoon can be normal. That gives a bigger comfort for the inflation, and also RBI also going to look into this data quite keenly. And we are getting the inflation data also. Inflation data has been cooling down, which gives some hope for the investors about the stance of RBI going ahead with respect to their interest rates are concerned, because RBI have given a pause right now. Whether this pause can be continued further or not is the one more thing market is clearly looking forward. Right now, overall, markets are in a consolidation phase. Of course, this month has been quite a shorter month. We have only 17 trading days in the month. So the bias is more about the buying side only. And what we are witnessing is FIs turning as the cherry pickers, and they have been keep on buying. The selling has came down from the FI side. So markets are inching towards a positive side, but the all eyes are on earnings of the companies.
Okay. When you talk about the earnings, we've already seen IT Bellwether TCS report its numbers yesterday. Of course, we've seen a slight slowdown when it comes to the kind of revenue projections and the earnings that have come about on profits as well. We've also seen some of the top global brokerage reports coming after that and giving an underweight rating on TCS after the earnings have been reported. JP Morgan, for example, has given an underweight rating with a target price of 2,700 on TCS, saying that it has missed Q4 numbers across the board, led by the US weakness, and they've now cut revenues by 1% and margins by 20 basis points, driving 2% EPS cut. And also the stock is trading at 24.5 times in 1 year PE forward, at a 22% premium to pre-COVID, and the demand is weak with no visibility of turnaround. That's what the concern that JP Morgan has really talked about. Now, Morgan Stanley, however, has given an equal weight rating with a 33.50 rupees kind of a target price on TCS. What they have said is that there are positives like the order book crossing the $10 billion mark as well, and the book to bill ratio has improved as well. They've also mentioned how the LTM attrition is down 120 basis points on a quarter on quarter basis as well. I wanted to take your own understanding of what you read through the TCS numbers, and what have you read through as far as the commentary is concerned and the outlook for this company.
Actually, one thing is, while analyzing TCS results, one thing we need to keep in mind is the global economy is more resilient than the people thought. So the order book has been robust for TCS. But going ahead, how the things will pan out, it all depends upon the how the U.S. economy and the Federal Reserve moves with respect to the U.S. economy turning into recession, or how long this recession and how deep the recession is going to be. These are the things investors are waiting for. The technology stocks are concerned, especially if this is the medium to short term overhang on the technology stocks. But for a longer term investor who is looking forward for that investment horizon of more than 2 to 3 years, definitely they can use the weakness in the bellwether stocks like TCS in this kind of weakness conditions are concerned. One can, in a staggered manner, okay, they can definitely start investing names like TCS at this point of time. They need to use this weakness in the market and overhang on the stocks for a longer term perspective. Not in a, of course, in a medium to short term, the kind of a headwinds the tech stocks going to face because of the uncertainty in the global economy. But the global economy is more resilient than people thought. That's what my understanding
Sure.
with respect to the tech stocks are concerned at this point of time. It can be a contrarian view right now, but for a contrarian view, it will test the patience of the investors, but it will pace in the longer term.
Right. And Infosys is likely to report its numbers today. The predictions here also look bleak. What is your own sense between TCS and Infosys? What would you prefer, and how would you, advise investors to really move forward as far as both these stocks are concerned?
Yes, actually, all the technology stocks, by and large, they're going hand in hand, and we need to look forward for the Infosys results. What kind of guidance they're going to give with respect to again going back to the U.S. economy and the banking and financial segment in U.S. economy is concerned. Right now, one thing what we can see is if we keenly observe the segment of verticals of the diversification they're doing is they're moving towards from BFSI to towards they're moving into uh, the artificial intelligence more, and also the pharma and also other healthcare sectors. They're closely getting increasing their order books. So there is a diversification is taking place because there was a worry how the overhang about the banking crisis in US have impact on their earnings and the future order books are order flows are concerned. So
Hmm.
one kind of consolidation is happening with respect to their order books are concerned. But again, just to repeat my comment on technology stocks like TCS as well as Infosys is concerned, for a longer term investors, it is a good opportunity. They can probably start investing in these uh, proven companies for a longer term basis. They can use this weakness in the market for a longer term portfolio building is concerned. Especially Sachi, we are what we have been witnessing is more number of retail investors have been coming into the markets, and last few quarters they have been venturing into the mid and small cap stocks, which they don't understand. Now there is a softening of the valuation with respect to the bellwether stocks and the large cap stocks due to the weakness in this market. They can increase or they can venture into the larger cap uh, stocks in their portfolios going ahead.
Okay. I wanted to also take your view as far as the mid-cap IT firms are concerned. I do remember that, about 1 or 2 years before also, you've been looking at this space quite keenly. And some of the stocks have been your favorites, which have also given sharp returns to investors in stocks like KPIT Technologies, for example. Now, they've already had a sharp run-up. At this point in time, how do you really view the opportunities in the mid-cap IT space then?
In the medium to short term, Sakshi, I'll stay away from mid cap IT stocks because of the valuations and also the earning guidance is concerned. So this time, okay, for a time being, I'll try to stay away from the mid cap IT stocks because the valuations look strict. There is a humongous rally in the names like KPIT Technologies and all. So I try to stay away from mid cap IT for the time being, and we need to analyze each company results and their guidance, and we'll take a call on mid cap IT stocks are concerned. But this is the time for the large cap IT stocks because these companies gives the comfort due to the uncertainty in the global economy, and also it gives the stability to the individual investor portfolios.
Right. Apart from the IT space, where else are you looking at opportunities for investors emerge amid the earning season?
At this point of time, Sakshi, always the banking and financial services, one can keep an eye, and they cannot ignore with respect to Indian markets are concerned. We need to give paramount importance to the banking and financial services in India. And one can look at the defense theme. Defense theme also quite resilient, even though despite of the valuations little bit stretched it looks because these stocks have been, despite of the wild swings in the market in the past couple of months. These stocks looks quite resilient. Just to name a few like HAL, Garden Reach, Mazgam Shipyard, all these stocks are showing their resilience and they have a clear order book visibility. So one can look these pockets like Cochin Shipyard. These names are quite resilient. The stock prices are quite resilient. So one can look of opportunities in defense, and also one can look opportunities in capital goods if there is any dip in the capital goods space. Stocks like Siemens and Cummins India, ABB, these stocks are quite resilient. So one can look opportunities in these kind of names just to hide and also take comfort in these kind of companies if there is any kind of wild market moves going ahead.
Okay. Two more pockets that I wanted to understand from you. One is the pharma pack that suddenly was showing some spurt in the previous trading session, with a lot of stocks really showing some intraday moves of 10-11% as well. Uh, has anything or is anything really changing structurally for this space, or is it going to be just an a long drawn process to understand what kind of opportunities emerge here?
So actually, Pharma have been underperforming in past 8 quarters, and the stocks have corrected on an average 50%. If we name the mid-cap Pharma stocks are concerned. Yesterday, there we kind of witnessed some kind of sharp moves, intraday gains, like the names what you are displaying, like Divis and all. Uh,
Yeah.
so these whether these kind of rallies started, whether the stocks are bottomed out, we need to wait and watch because the earnings are crux. We need to analyze the earnings of pharma companies in Q4. Then one need to take a call. But we can, for a longer term perspective and a medium term perspective, one can cherry pick the stocks in pharma. They can probably they can in a staggered manner. One can start accumulating pharma stocks because the valuations turns attractive at this point of time, and there is a clarity that is coming with respect to the earnings are concerned that is going ahead, and also many stocks have US FDA approvals have been pending. So these are the overhangs on the company. But with respect to purely valuation perspective, the valuations of majority of the pharma companies turn uh, very attractive. So what we can see is one on a positive day, some kind of cherry picking that's have been uh, witnessed in pharma stocks are concerned.
Okay, well, thank you so much, Mr. Batini, for being with us and sharing all these insights about the markets going forward from here and the opportunities that investors can look to tap at this point in time. Well, we'll look at the Sensex right now. It's dragging a little bit lower, 223 points cut for the Sensex, although it's come off the lowest point of the day, 60,170 currently. The Nifty is down by about 57 odd points, 17,754 the current level for the Nifty. But we'll keep an eye out on all the market movement to help you understand what exactly should you be doing with your equity investments, and we'll get you expert voices through the day as well. So do stay tuned with us on to Business Today TV, and don't forget to subscribe to this channel and continue to engage with us on our other social media platforms as well. Until then, thanks for tuning in.